On today's episode of the Cryptoverse, how cool would it be if the in-game gold was actually real gold? That might now be possible. So Bitcoin took a sudden dip on the 6 a.m. candle, UTC time. We'll have a look at that today. Now that Ethereum Classic has experienced a 51% attack, we'll look at the probability or the likelihood that Bitcoin could also experience such a thing. That's important for you crypto investors and me. There's also some figures on this from Bitstamp that we'll look at. The Ethereum ETH hard fork upgrade is coming in under a week, so pay attention to this. It's the next major event in crypto. The Yuan may end up being forced back onto not the gold standard, but being backed by gold anyway. And Nick Szabo, the inventor of the smart contract, is of the opinion that central banks will probably start holding Bitcoin as a strategic reserve asset. So, plenty to talk about today, but do you know what I get really tired of? Hearing almost every authority figure in the crypto space repeating the same old thing like a broken record. They say the biggest barrier to crypto adoption is education. What frustrates me about that is I spend every waking moment building Cryptoversity, which is my online crypto school. So if you've invested in crypto, well, please invest in protecting that investment by getting educated. You need to spend a fraction of what you've probably invested in crypto to protect yourself by becoming educated. And quite frankly, education is the only way to reduce your anxiety. So that's what I'm here to do. Until then, let's get into these stories. This first one I wasn't intending to talk about, but there's this great big banner across the top of CoinMarketCap. And I often just ignore those ads, but this one did actually catch my attention. It's for this thing, gold.io is the domain name. That's a brilliant domain name, gold.io. And again, I'm always criticizing marketing for these crypto projects because it just says gold.io DEX plus DAC. So decentralized exchange and decentralized autonomous cooperative. But that doesn't really tell me what the project is, and it's not obvious immediately what the hell it is. Which is annoying because people, you've only got like 2 seconds or 7 seconds to get across what your website is about, unless someone just bounces out, especially if it's the result of clicking on an online banner ad. You've even got less time to convince someone. So this is where I say, this is my idea, by the way. This is not the official line from the project. But it's, what if in-game gold tokens that were cryptos were tied to real gold, right? That's me saying that is a brilliant use case for this. So it's a project being built on EOS.io software, not the EOS mainnet. It's another sort of side chain built on the EOS.io technology, which will of course make it easy to link to the EOS mainnet. And I think this is what they're going to do. They're going to build a gold-backed token on the EOS technology on a blockchain, gold-backed cryptocurrency. So that makes it part of the EOS ecosystem. One, but two, that's what then came to my mind was, wow. If I don't know, World of Warcraft, this is the obvious example, started listing this particular gold token as the gold in the game, and the EOS.io software has the scaling capacity and the transaction speeds to make that possible, imagine that. If gold, in-game gold, were real gold, that would be insane. Now, I haven't dug deep into this project yet, but check this out. Check out the unique way that they are displaying the team. Now, this is fascinating. I've never seen this before. So it says core development team, and it lists all of the GitHub usernames for all the developers and links to their GitHub profiles. That is fascinating. So they also have all of their titles and so on, but front-end, back-end developer, full-stack developer, blah, blah. And then above that, they show their GitHub activity. This is fascinating. And this is really like sort of putting everything out there. And they've probably studied the whole, because they're doing a token sale, right? I'm not incentivized to talk about it, but that's not really that important to me. You can check out my Truth About ICOs in 2019 video for my perspective on ICOs. But it's this thing where they're putting front and center the amount of code commits and the consistency of the development and who the developers are and what their expertise are and all this sort of thing. That's important to us as crypto investors, right? Because in crypto networks, this is basically code. That's like the most important thing. Is it solid and does it solve a real problem? We want to know, if these developers are credible or not, because they're the ones that are building these networks that we are going to own tokens in, right? So This is a very unique approach. I want to see more of this. I want to see more token sales in particular, or any crypto projects, front and center. What does your GitHub activity look like? How much contribution to your open source code is happening? Who's doing it? What's their credibility? And let me check it for myself. I like it. So I just wanted to point out and applaud them for that. Very unique way of displaying the team. If you know anything about this project, post it in the comments, because I haven't studied it in detail yet. I just wanted to praise them for those little things. And if you want me to look into this some more, let me know in the comments below as well. Moving on. Bitcoin's price took a hit on the 6 a.m. candle. The battle for $4,000 is, well, it's gone away for the time being. So this happened on the 1 hour chart. This is the Coinbase chart from BTC USD. And if you look at this on the video, well, you can pretty much see what happened. We had a Bart Simpson pattern. You know, I said there was that flag, which was the big pole from the 5 p.m. candle on the 6th of January, which pumped us right up above 4,000. It did the round. Bitcoin was being supported by $4,000, and then the 6 a.m. candle today, UTC, took a massive dump right through the $4,000 level and dumped all the way down to like 3,757. So where it's trading now at 3,777. Now, I've got a few things to say about this. Just look at the volumes. Whenever I see these big volume spikes with a big pump candle like this or a big dump candle, I automatically think manipulation. I can't help it. This is actually manipulation up or down. Look at the chart once more. Back we're here where we had this big pole on the flag from 5 p.m. on the 6th of January. Look at the volume spike. That could be manipulation to the upside. And then look at this even bigger volume spike on the 6 a.m. candle from today, which crashed the price like by, well, from above 4,000 to 3,700. That's what I just immediately think manipulation when I see that. But I always think that, so that could just be my distorted perception. I might be biased in that regard. So, you know, take that with a pinch of salt. What this does point out, though, is the biggest problem in crypto is a lack of liquidity. The only reason why this amount of volume causes such volatility is just because that amount of volume is a disproportionate amount of the volume, right? In any one hour. So what do we have? Like just looking at the volume here, 383,000 Bitcoin traded in that hour or something on Coinbase. Anyway, so if that were millions of Bitcoin turning over every hour, then 300k wouldn't matter, would it? So the question is, what's this done to the buy support on Bitcoin? Well, let me just refresh this on CoinMarketBook and see what's happened. Well, it's gone down since earlier on, to be honest. It was at 167 million when I looked at it earlier on, and I just refreshed the page, and now it's down to 156. Very interesting. Ethereum's buy support has gone up quite a bit. We're at 42 million, I've just noticed. I wasn't prepared to talk about that, but it's I've just noticed that has jumped quite a bit, and it's triple the next coin. So EOS is the third most in-demand coin by buy support at near enough 16 million, and Ethereum's nearly at 45 million, which is about 3 times as much. Interesting. But in any case, the point I was making is that Bitcoin's buy support has dropped since this. So the whole liquidity thing, it's a catch-22. It's a catch-22, isn't it? People don't want to get involved in crypto because there isn't enough liquidity and there isn't enough volume, but that's why people get involved in it. But they need to get involved in it in order to improve the volume and the liquidity and stabilize the prices. It's frustrating. What's ironic about this is that the new lessons that I've just added to the the Crypto Exchange Mastery course help you understand exactly how this manipulation happens. The video I uploaded yesterday to the members area is on exactly how exchange order books work and how even a reasonable amount of volume. Actually, in the example I give, I use Binance, and I only use a $100,000 buy order to show how you could rip through the order book quite significantly and cause situations exactly like this. So yeah, check that out if you're interested. It'll show you. It will go some way to proving that I'm not paranoid when I see these candles and I go, manipulation. Because if you understand how the order book dynamics work, you might think the same thing as well. But so check it out and let me know. Moving on, Bitcoin 51% attack figures. Interesting this. This is tweeted out by Bitstamp. So we know the other day that Ethereum Classic had a unexpected, of course, 51% attack and about $500,000 worth of ETC was double spent. Not good. But that's the danger, quote, danger of owning tokens in proof of work coins that have relatively low hash power. So what's the probability of this happening to Bitcoin, right? This is something we want to know as crypto investors, especially as Bitcoin holders. How likely is that happen to Bitcoin? Well, Bitstamp have got some figures for us. Check this out. They tweeted this out. They said, did you know hacking Bitcoin with a 51% attack would require spending around $5.5 million per day on electricity if the cost of electricity were 5 cents per kilowatt hour? And that's just the energy costs, let alone the necessary equipment, which would mean you would have to invest billions to actually buy the kit. Then you would have to sustain that $5.5 million a day in electricity spend long enough for you to have the longest chain, and hope you don't go bankrupt in the meantime. And what you're going to get, the coins that you mine may end up being worthless if you don't outrun the rest of the miners, because if their chain ends up being the longest, all that work you did completely goes to waste. So yeah, those are the actual figures. So one response to this tweet was someone, which is a valid response. Someone says, like, what if the Chinese government banned mining? Because there's a lot of miners in China. What if the Chinese government came down on the Chinese miners? Well, that would actually reduce the amount of hashing power in the Bitcoin network, wouldn't it? So it's not necessarily outrunning the network by having more power than them. One thing you could do is attack it by reducing the amount of mining competition. Then you could attack it, right? That would be another way of doing it. Bring the thing down. Okay, so if you shut down all the Chinese miners, well, then Bitcoin's mining algorithm would automatically adjust, lowering the difficulty and make it more profitable for people in other parts of the world to mine at a profit. So it would just move profits to elsewhere in the world. So that's not really the solution. Bitcoin is an anti-fragile organism. So doesn't scare me at all. That's all for that. Let's move on. Ethereum hard fork, the next big event in crypto. Pay attention. So I've found a fantastic summary. The best summary for most of us comes from CoinGecko. This is fantastic. Constantinople hard fork countdown approximately 6 days, 12 hours away. Not strictly true. It's actually block 7,080,000. So depending on block times in between now and then, depends on exactly when that will happen in terms of clock time. So for the Ethereum investors among us, I have Ethereum. I hold Ethereum. What we got here, this whole hard fork thingy upgrade, it improves some of Ethereum's fundamentals. Principally, it's going to lower gas fees, so it makes transactions on the network cheaper. That's better for developers because it makes the transactions cheaper. That's basically the way it does it. However, it decreases the rate of mining rewards, so that's bad for miners, right? It's going to reduce miner pay by about 33%. So the rate at which new Ethereum is created, it's currently like 3 Ether per block. It's going to get down to 2 Ether per block. So as investors, this means that if the Ethereum inflation rate, the rate at which new currency is created, is about to drop by 33%. I would say that's a good thing as an investor, because while Ethereum's scarcity will continue to drop because new currency is going to continue to be created, at least the rate of issuance is going to slow down. So that's a good thing. So if adoption of Ethereum outpaces the inflation rate, well, that's good. That means the token should, all things being equal, appreciate. So a lot of this stuff that's going to be added to Ethereum in this upgrade, it's important stuff, but we can't really appreciate it as users. We won't really feel the difference until later, because this is a preparatory step for the switch to proof of stake, which will really take the lid off in terms of Ethereum's ability to process transactions. So the scale Ethereum will be able to achieve when they eventually do the proof of work switch will be significant, very significant. And that should bring Ethereum up to EOS and Tron levels of transaction processing capacity. Let's move on. Further to what I covered yesterday about central banks, reserves, and then potentially having Bitcoin as a small allocation, thanks to everyone's feedback on that, I happened upon this article from Zero Hedge. Bank of England boss, who is Mark Carney, says China's renminbi will rival the dollar as the global reserve currency. That was something that I talked about. I would say, I used China and Russia as the example. You got the ruble and the yuan or the renminbi, and they're deciding on trade, and they're like, well, let's use the ruble, let's use the yuan. everyone wants to be the reserve currency because it's given the United States such a huge, a huge edge in terms of the prosperity for their own nation, right? Now, this Zero Hedge article is long. It's a long article, but that makes it persuasive to me because it makes a very long case for why, one, the Yuan may end up being backed by gold and actually might be forced to do so. Can't really explain that in this video, otherwise it's going to be an hour long. Just go check out the article for yourself. So one thing that Mark Carney does say, this is being asked questions by an audience of journalists and so on. So check this out. I've highlighted it in yellow here. So this is regards to the SDR, the International Monetary Fund's special drawing rights. So one of the first questions he was asked was, quote, do you envisage one of the types of IMF SDRs to become a global currency in his lifetime? If so, will it be backed by gold, blockchain, or any kind of cryptocurrency? Mark Carney, again, this is the boss of the Bank of England, right? He responds by saying, quote, the IMF's SDRs are designed for a specific purpose, to supplement IMF member countries' official reserves and to help them to address balance of payment problems. So they are not intended to become a widely accepted means of exchange, which is what most people understand currency to mean, close quote. That's very interesting. Excuse me, that's very interesting to me. I say that because for any of you people that have studied economics and like Keynesian economics versus Austrian economics and all this sort of stuff, I'm Austrian, on the Austrian School of Economics. I understand both, right? I've studied both, but I'm much more subscribed to Austrian economics as the way to bring about economic prosperity for everybody. What I see with the SDR, though, it's becoming ever more like the Bancor. Now, Bancor is actually a crypto project, but if you look back to the work of John Maynard Keynes, the founder of Keynesian economic theory, the Bancor was an idea that he created. Can't go into that right now. It's going to be a 3-hour video, but look up John Maynard Keynes and the original Bancor idea, and you'll see, if you've been watching the development of the SDR, the special drawing rights from the IMF, you might agree with me on this. I see the SDR as becoming more and more to realizing the vision of the original Bancor idea. So that's just a comment. You can do your own research on that, but that's a whole can of worms on its own. Moving on to another insight from this article, though, check this out. In the orange, it says here, someone asks, like, what about other currencies and being backed and so on? Here's a specific quote from Mark Carney. It said, half of international trade is currently invoiced in US dollars, even though the US has a much lower 10% share of international trade. So the dollar is disproportionately used in international trade compared to the amount of trade that's actually done by the United States, the country. Very interesting, that, isn't it? So this is why, the other countries around the world, the big purchasers, the Chinese and the Russians of this world might want to start using a different currency, right? Because the dollar is disproportionately represented in international trade. Moving on from that, crypto as a reserve currency. I've highlighted this bit in green. So Carney was skeptical about the possibility of cryptocurrencies such as Bitcoin rivaling national currencies as a reserve instrument, saying, quote, it is early days for crypto assets, but in their current form, they are not promising as a form of money, let alone as a global currency. They are poor stores of value. For example, there is extreme daily variation in their value. Crypto assets are not accepted on the high streets or online retailers as a form of payment in the UK. Didn't I just say that earlier on in this video? I said the problem is that people go, it's too volatile, there's not enough liquidity. But if you use that as a objection for getting in, the problem is never going to get solved, is it? It's a catch-22. If you won't get involved because of low liquidity, well, you're not going to be helping to add to that liquidity, right? This is what frustrates me about central bankers when they say this kind of BS. Are they public servants or not, right? This is the question. Are they public servants or not? If Mark Carney, and this is just a theory of mine, feel free to reject it out of hand. If Mark Carney and the Central Bank of England were really, 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 their top priority was in the interests of the individual in the economy, right? Well, then they would say, okay, they would look at crypto and they say, okay, this has a real chance of fostering economic prosperity and providing hard money and all the rest of it. And then they would come about the problem of liquidity and the volatility with a solution-focused mindset. But they don't do that, right? They would say, okay, the problem is liquidity. How do we solve that problem? How do we help resolve that problem. Because if we can remove that obstacle, on the other side of that is a crypto economy that works, and then everyone can benefit. But instead, they use volatility and they use a lack of liquidity just as an excuse not to get involved or for it to be adopted. So that's what really, really frustrates me, trying not to swear. All right, to round this off then, Nick Szabo seems to agree with what I said yesterday about central banks holding crypto as a reserve asset. So for this, we're going to hop over to Bitcoin.com, who reported on this. Nick Szabo, central banks may turn to cryptocurrency reserves over gold. So like I said in the opening of this video, this guy is the inventor of smart contracts, and he invented BitGold, which was a precursor to Bitcoin. BitGold didn't quite work, but without work on BitGold, I don't think Satoshi would have been able to create Bitcoin, because it was an improvement on BitGold. So Nick Szabo's reasons for why central banks might start holding crypto in reserve: sanctioned countries. I said that yesterday. Zimbabwe, Russia, Iran, blah, blah, blah. Also, he says countries with failed monetary policies. Venezuela's, blah, blah. It's going to keep happening. It's going to keep happening. So this is from the 8th of January when Szabo spoke at the Israeli Bitcoin Summit at Tel Aviv University. So I've picked out another quote from his in this article. Let's go down to the red bit in this article here under the heading of "Even central banks may attempt to hoard Bitcoin reserves over gold." So here's a quote from Nick Szabo. Quote, "There's going to be some situations where central banks can't trust foreign central banks or governments with their bonds, for example." That is exactly what I said yesterday. I said, back to China and Russia, they're having chat over international trade, and neither of them are going to want to use the other's currency, right? Because whoever gets to trade in their currency, well, they've got a serious edge, since their central bank can manipulate the currency supply and devalue it, right? So that gives them an edge in international trade. That's why if I were Russia as an entity, or I were China, or if I were any country in the world, I would want to use a neutral currency for international trade, a la Bitcoin, right? That's why I keep campaigning for that. Now, just because that makes friggin' sense doesn't mean they're going to do it. Well, of course, that's not the way the world economic system works. If we were rational about it, right, the whole system would be different, but we're not, so it's not. But anyway, that is all I've got for you today. So if you like this episode, please go ahead and hit that like button. If you really liked it, hit that subscribe button. And if you want to help out the show by providing some financial support, then check out the website, thecryptoverse.show. If you click on the big blue button in the top right-hand corner, that'll take you through to Patreon, where if you help out the show, then I'll reward you with cryptocurrency tips as an audience member. I'll also give you the videos without ads. I'll also give you a private podcast feed. I'll also let you have access to private chat groups so you can ask me questions and stuff. But there we go. Other than that, I'll be back with the next episode of the Cryptoverse. Until then, it's me, Chris Coney, saying bye for now.